Question: would you as an intelligent investor put your money into a shell company with no track record and no ongoing business? Look, I know I sound like one of those pop-up ads you see at the bottom of your Facebook or Google search that says you can make $700 an hour working from home. Lies, all lies. But listen, in recent years, we have seen a new business model emerge called Special Purpose Acquisition Company or SPAC, which is ultimately a blank check company. So how does it work? It is literally a bunch of experienced people wanting to set up a firm, but they don't have enough funds. Putting your money in a SPAC? Doesn't it sound like trusting a matchmaking agency to find you the love of your life, or trusting Airbnb to find you your perfect honeymoon hotel? Giving a whole lot of money to a group of strangers on the assurance that they are experts in what they're going to buy? I don't know about you, but I certainly need a lot of faith to do it. Remember the penny stock fraud of the 1980s? Brokers were cold-calling small to mid-sized investors and telling them about some fantastic deal, basically getting them to buy stocks over the phone without even seeing a prospectus. Yeah, it's not exactly the same, but it's certainly ringing the same bells. Now, first of all, SPACs were created to give investors another option in the equity market. If you compare it with a private equity fund, a SPAC gives investors more liquidity to trade shares freely on the exchange. Unlike the PE fund, SPACs are also more transparent in its management. Before you get to become a SPAC though, the management has to be scrutinized, just like any other IPO. So basically they are selling the track records of the management. It's like watching the movie Valentine's Day because it has a lot of celebrities starring in it. Can't go wrong, right? Well, guess what? Rotten Tomatoes rated it 18% out of 100. And best comment goes to... For Malaysia, all the SPACs have been oil and gas, but after it got popular, suddenly you had everyone jumping onto the bandwagon. Let's be frank. Since SPACs first popped up 5 years ago for us, there were 9 attempts to be listed as a SPAC, but only 5 made it to the main board, and out of those 5, only 1 graduated to become a full-fledged company. A SPAC only graduates when it successfully acquires an asset. The 4 failed attempts include 2 mining SPACs, Australasian Resources Berhad, Terragali Resources Berhad, a palm oil SPAC, Kemara Palmia, and probably the most famous one, EcoWorld International Berhad. Man, I want a SPAC too. Maybe I should ask people to give me money, and in return, I'll give them some life-changing advice. Looking at the failed attempts, it was because the SE clearly did its job on closely monitoring the rules on SPACs. But has it gone too far in shooting down proposals? Do they need to be more encouraging for investors to look at this type of investment tool? SC Chairman Dato Sri Ranjit and me said at the point when they first allowed SPAC, there was a need to look into the structure more closely. Take a listen.
At that period of time, based on feedback and our assessments, there was a need to be able to refine. That's what regulation must be about. It must be context specific. It must allow some degree of flexibility where there needs to be an easing or tightening that must occur.
But according to Investopedia, SPACs are nothing more than a slick way for investment banks and management to get fat checks while you bear the risk. Some argue that SPAC structure is just flawed. Some say they are usually lemons, hence why they are in a second-hand parking lot to begin with. Think about it. If the oil field is overflowing, why would they want to sell? Did they suddenly develop an allergy to a lot of money? Unless they sell it at a ridiculously expensive price, else how are they going to justify their losses? The truth is, there will always be question marks over the assets that are bought, no matter how good they look or how shiny and chrome are their prospects. Let's look at the numbers. A private equity firm gives a minimum internal rate return of 8 to 9%, which is not far from what you could get from a SPAC. If it's about the same, why not go for broke and go for the SPAC? While SPACs take 3 years before it expires, it may seem a long time, but time flies when you're having fun, and the promoters may find themselves in a position where they might have to rush to buy something or anything. Soon, we are going to witness the first SPAC casualty in Malaysia. Click Energy Berhad, listed 3 years ago, was unable to buy any asset before the deadline and now needs a liquidator. Click Energy's Kazakhstan deal didn't pull through because, as he said, not enough information. And then there's Sona Petroleum. Sona just made it in time to get SC's green light to buy an Australian asset. But surprisingly, during its AGM on March 30th, there wasn't a clear answer from shareholders. Therefore, it got postponed. The chairman gave a 2-minute press conference and he clarified that the shareholders didn't have time to understand the deal. So even though SC has let you pass, but you still have a room full of shareholders to persuade.
You shall not pass!
Alright. What about the one that graduated? Just one, Hibiscus Petroleum. But their earnings don't look good either. Its net loss ballooned to 164.2 million ringgit in its second quarter ended December 31st last year. So what if it's graduated? We haven't seen any single drop of oil produced from its field. Maybe we are still pretty inexperienced in this game. So let's take a look at a mature market, which is the US. According to SPAC analytics, of the 198 SPACs since 2004, 72 have liquidated, earning almost no returns for their investors. Of the 111 SPACs that acquire companies, the average return was negative 14.4%. By contrast, the Russell 3000 stock index in the same period had a positive return of 5.9%. We certainly saw some successes in the SPAC market, including Burger King, which went public in London. But still, failures outweigh successes. So whether a SPAC is a good idea, ask yourself this: would you trust a matchmaking agency to help you to get your lifelong partner? May the odds always be in your favor. Just saying.